Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Cameco stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 29 billion market cap. They're trading at $67 a share and they have 434 million shares outstanding. Cameco is the world's largest uranium company. It owns 55% of the Cigar Lake mine, which is considered the most prolific uranium mine in the world. They also have a 70% stake in the McArthur River mine and an 83% interest in the Key Lake mill. All of these locations are located in the Athabasca Basin of Saskatchewan, Canada. That area has an enormous amount of uranium. Let's take a look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. They did have a small negative in 2020, a nice positive in 2021, 360 million. It was cut in half in 2022, 160 million, then up to over $500 million, the highest ever in 2023. Their free cash flow grew 230% from 2022 to 2023. And the free cash flow per share is $1.23. Each share is $67. And look at their margins. They converted 30% of their revenue into free cash flow. A lot of their revenue, profits, or free cash flow are highly correlated to the price of uranium. We'll look at that later. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's negative in 2020 and 2021. A small positive in 2022. Then it blows up in 2023, 360 million. And pretty good margins, 20% net profit margin. They converted 20% of their revenue into net profit. Revenue is a sales for the company, and that's similar from 2020 to 2022. Then it grows 39% into 2023, 2.6 billion. Revenue per share is $6. They pay a really small dividend, 0.18%. Their annual dividend payment is 52 million, which they can easily afford. As you can see here, their free cash flow and net income are much higher than 52 million. We estimated 4 years of future free cash flows. We also estimated a terminal value with all cash flows past year 4, that's 23 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $19 billion. We divide that by 430 million shares. And we get a calculated stock price of $45. They're trading at $67, so they're trading at a 50% premium. It's a big, strong sell, according to the model. All these numbers and the financials we just looked at are in Canadian dollars. We're looking at the ticker that trades on the TSX. So it's hard to predict where uranium prices will be. They have come up a lot the past few years, which is why this company's stock price has improved dramatically. There are 9 companies in the same industry as Cameco, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. All these numbers are in US dollars because all these tickers trade in the US. They spend the most in CapEx, 115 million. NextGen spends 87 million. Most of these companies don't use much debt, which is really good. It's kind of surprising. Only Centrus uses debt. The rest rely on equity and cash flows. Cameco is the only company that pays a dividend. They generate the most free cash flow. A lot of these companies are negative. Cameco is the biggest company in this industry. They're bigger than the other 8 combined. Their price to book is equal to the median. They trade at 80 times earnings, so it's a bit of a premium. 50 times free cash flow, which is the median. Only 3 companies generate positive free cash flow. They trade at 11 times revenue, which is high for the average company, but I guess for a uranium company it's not that high. They generate a lot of revenue, more than anybody else, and their 5-year annual revenue growth rate is decent at 5%. The average is negative 4% because of Denison Mines, negative 34%. That drags down the average. Here's the price of this stock compared to a uranium ETF the past 5 years. The red line is the uranium ETF, which is up 135% in 5 years. This stock is up over 300% in the past 5 years. You can see they were tracking each other really closely, then this stock took off. CCJ is a company that can outperform other companies and the commodity. It's not 100% correlated to the underlying commodity, but it's definitely correlated, as you can see here. In the past 2 years, the ETF is up 10%, this stock 62%. This stock has been performing great recently. In the past year, the ETF is up 58%, this stock almost 100%. You really got to owe it to uranium. Uranium prices have gone up quite a bit. This chart tracks the spot price of uranium. It only goes back 5 years. But look how low it was in 2019, $25. It more than tripled from this point to the beginning of 2024. It peaked at over $80 in February 2024. It's come down a little since the peak. But that's why uranium stocks are so hot recently. And the real big run-up was from mid-2023. It went from 45 to 80 in just a few months. So if the price of uranium goes down a lot, this stock has to go down. And if the price of uranium goes up a lot, this stock has to go up. That's why it's a little tricky investing in a commodity-linked company, more so than a regular company. Regular companies are correlated to a lot of things. But for instance, I know Hershey is struggling because the cocoa bean is getting more expensive. But they do sell other things, and they could adjust pricing in different ways. They could cut expenses. So they are correlated to the cocoa bean, but not as correlated as a company like this is to uranium prices. Let's take a look at their MD&A. This is for 2023. Here's a nice visual of their locations where they mine uranium. The Cigar Lake Mine, MacArthur River Mine, and the Key Lake Mill. This is what I mentioned in the beginning of the video. Here's the Millennium Project. Their corporate headquarters are in southern Canada, right above northern US. And here are their locations in the US. The Blind River Refinery, Port Hope Conversion Facility, Cameco Fuel Manufacturing. Westinghouse is one of the world's largest uranium service businesses. This company owns 49% of Westinghouse, and Brookfield owns 51%. Let's read about their uranium operations. Our uranium production capacity is among the world's largest. In 2023, we accounted for 16% of the world production, with sales of over 205 million pounds of uranium. U3O8 is uranium ore concentrate. Those are the symbols. If you're familiar with the periodic table, U is uranium, O is oxygen. We have controlling ownership of the world's largest high-grade reserves. Our Tier 1 assets are licensed, permitted, and are proven reliable and have expansion capacity. It is really important to get licensed and permitted, because if that doesn't happen, you can't pull any of the materials. It would be illegal. They also have a uranium fuel shipping company that offers refining and fuel manufacturing services. They have 21% of the world primary conversion capacity, meaning they convert the raw material into something useful, like for fuel for nuclear power plants. Because when you pull a commodity from the ground, it is useless. You can't use it for anything. You have to refine the commodity. Just like pulling a cocoa bean from the ground, you can't eat it. It's disgusting. It's bitter. You have to refine the cocoa bean and then combine it with something like milk and sugar to make it into chocolate. You can't just eat it raw. They have commitments to sell over 75 million kilos of UF6. That's uranium hexafluoride. UF6 is the production of uranium for nuclear fuel. Here are some of their European operations. They have a location in Kazakhstan. I think Kazakhstan generates more uranium than any country in the world. And some Westinghouse locations in Eastern Europe. They also have a couple locations in Australia. In November 2023, they completed the acquisition of a 49% interest in Westinghouse. Brookfield owns the other 51%. Here are the total number of nuclear reactors under construction. 23 in China. So China is trying to get in on the uranium game. 10 more in Asia, 8 in India, only 1 in the US. The world reactor count has been declining. 451 in 2018, it's down to 438. So we need more uranium. In 2004, the average price of uranium was $20. Its peak was in 2007 at $100. And it's come up a lot from 2021 to 2023, but it's even higher now. We looked at the chart earlier. 2024 is a great year for uranium. It hit 80 in February. I think it's 70 currently. Their revenue for 2023 is 2.6 billion Canadian dollars, up 39% from 2022, mainly because the spot price of uranium has increased so much. Gross profit up a lot, up more than 100%, 560 million. Net profit 360 million, up from 89 million. Operating cash flow 688 million, also up more than 100%. And they produced a lot more uranium in 2023 compared to 2022. It went from 10 million pounds to 17.6 million. And they sold 32 million pounds of uranium. Because the company doesn't sell everything they produce. They actually sold more than they produced because the prices have come up a lot. It doesn't matter what they produce. It could be gold, silver, oil, uranium. If prices go up a lot, they pull from reserves. But if prices go down a lot, then they add more to their reserves and wait for prices to go back up. Because you can't make a profit on uranium when it gets low in price. Like for instance, if it's sub $40, they would probably lose money. But if it's north of 40, they would make money. I'm not sure of the exact number, I'm just giving you an example. See, the price they sold uranium at in 2023 was 67 Canadian dollars. Last year, 58 Canadian dollars. This top part is the raw uranium sales. This middle part is fuel, selling uranium fuel. They sold 12 million kGU with an average price of 36 Canadian dollars. Westinghouse revenue 520 million. They had a loss in Westinghouse of 24 million, but positive adjusted EBITDA of 100 million. Here's a nice breakdown of the average prices. So the spot price for uranium was $50 in 2022. That was the average for the whole year. It went up 25% to 63 in 2023. And so far this year in 2024 for the first quarter, it's probably averaging in the mid 70s. The price of fuel went up 29% from 32 to 41. So if you go to the gas station and get fuel for your car, it's $5, $6 a gallon. Alternatively, you can get a gallon of uranium for your nuclear reactor. That will be about $40 a gallon. Here are their sales by region. 58% in US and Canada, 26% in Europe, 16% in Asia. And their 5 largest customers account for 62% of their sales. So they're pretty concentrated. And they have contracts to sell 205 million pounds of uranium to 37 customers worldwide, and 75 million kilos of fuel to 33 customers worldwide. So this chart is a sale of uranium, the raw commodity. This chart is fuel sales. So half their fuel sales in America, 45% in Europe, 5% in Asia. Their 5 largest customers account for 64% of their fuel sales. Here's a breakdown of their operating costs. Labor, 41% of their costs. Contracted services, 28%. Production supplies, 31%. And production supplies include reagents, fuel, and other items. A reagent is a compound added to a mixture to test whether a reaction occurs. So it's used to test if there's active uranium in the product. The 28% of contracted services includes utilities and camp costs, air charters, mining, and maintenance contractors, in addition to security and ground freight. Here's their delivery volume by quarter. So it looks like the fourth quarter of 2019, they delivered the most uranium, 14 million pounds. In the fourth quarter of 2023, a little under 10 million. And the projection is a little over 10 million for the fourth quarter of 2024. These 4 quarters are estimates. They do have a lot of cash on their balance sheet. It was 1.3 billion in 2022. It's up to 2.3 billion. And they're cash flow positive, generating almost 700 million in operating cash flow, more than double last year. They did invest a lot into PP&E, 3.2 billion, a heck of a lot more than last year. And they added debt, 800 million of debt. That was to fund the PP&E. Let's take a look at the stock on Simply Wall Street. Its last price, 67, market cap 29 billion Canadian dollars, up a lot in the past week, up 14%. And it's doubled in the past year, up almost 100%. Let's see what they say about the company. Cameco provides uranium for the generation of electricity. It operates through uranium, fuel services, and Westinghouse segments. The uranium segment is involved in the exploration for mining and milling, purchase and sale of uranium concentrate. The fuel services segment engages in the refining, conversion, and fabrication of uranium concentrate, as well as the purchase and sale of conversion services. This segment also produces CANDU reactor fuel bundles and other reactor components. CANDU, that's an acronym, CANDU. That stands for Canada, Deuterium, Uranium. All nuclear power plants in Canada use the CANDU design. It's a safe and reliable reactor technology. CANDU reactors produce electricity through a process known as fission. Fission is a process splitting atoms of natural uranium inside the reactor, releasing radiation and heat. Can-do reactors are supposed to be more efficient and safe than the alternative. Cameco offers nuclear fuel processing services. Their Westinghouse segment engages in the manufacture of nuclear reactor technology original equipment. This segment provides products and services to commercial utilities and government agencies, and outage and maintenance services, engineering support, instrumentation and controls equipment, plant modification, and components and parts to nuclear reactors. It sells its uranium and fuel services to nuclear utilities in the Americas, Europe, and Asia. They were incorporated in 1987, 37 years ago, headquartered in Saskatoon, Canada. If you're like me and not familiar with Saskatoon, it is the largest city in the Canadian province of Saskatchewan. Saskatchewan is just north of Montana and North Dakota. Here's their historical stock price. It looks like it IPO'd in 91, and then it went up and down. It got kind of low in 2000 like most stocks. Then it had a major run up in 2007, breaking through 50. It came down in 2009 to the low 20s. Up again to 40 in 2011, then struggled for 8-9 years, falling to about $10 in March 2020. Just this year in January, it hit its all-time high, 68.51. It fell to the low 50s in March, but it's coming back, getting close to its all-time high. Simply Wall Street's price is 51. They say it's 30% overvalued. 14 analysts priced this stock at 74. The revenue forecast for 2024 is $3 billion, 2025 $3.1 billion, 2026 $3.25 billion. And the free cash flow forecast is $500 million in 2024, $650 million in 2025, and $759 million in 2026. All these numbers are in Canadian dollars. $759 million Canadian dollars is roughly $560 million US dollars. Their revenue back in 2013 was $2 billion. It reached $2.8 billion in 2015. That was their highest ever. And then it came down to $1.5 billion in 2021. But uranium prices are increasing, so is their revenue, up to $2.6 billion currently. This red line is their debt, which looks pretty steady, $1.3 billion in 2013, $2 billion in 2023. But they have lots of equity. That's the blue line. Their equity is always a lot higher than their debt. And this green line is their cash. So they currently have $6 billion of equity, $2 billion of debt, $560 million of cash. They used to pay a really big yield, 3.5% in 2016, but then it dropped a lot in 2018. Now it's about 0.5%. They were paying a quarterly dividend up through the end of 2017. They changed it to an annual dividend and they reduced the payment. So that's why the yield has come down. The CEO's salary in 2017 was $1 million, up to $1.1 million currently. Total compensation $7 million. He's been with the company a long time, 14 years as CEO. There's one insider buy in the past year, but a lot of sells. Look at all these sells. About 230,000 shares have been sold in the past year. 67,000 have been purchased. 70% of the company is owned by institutions and 30% by the general public. Fidelity is the biggest shareholder at 7%. Then Vanguard, Capital Research, Murray Asset Global. Then you see Morgan Stanley, Alliance Bernstein, Bank of Montreal. Then some big Canadian banks. Bank of Nova Scotia, RBC, CIBC. A Swedish bank owns 0.74%. Platinum Investment. That's an Australian asset manager. The employee count has gone down a lot. It was 4,000 in 2014. It's down to 730. And the ticker trades on the New York Stock Exchange. The ticker trades on the New York Stock Exchange, TSX, Deutsche Börse, and London Stock Exchange. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.